behalf of CrossCheck Media and BizTalk Today TV, welcome everyone to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in beautiful Scottsdale, Arizona. And with us today is Rebecca Kacaba. She is the CEO and co-founder of DealMaker. This company is re-engineering the capital raising process. They have raised over $2 billion. Rebecca, welcome to Buy, Hold, Sell.
Thank you. Thanks for having me. Excited to be here.
Well, we're happy to have you here because I got to get into this. You completely changed, you transformed the legacy way of going to a Wall Street bank and having a company who's had this great story with the business plan and everything, trying to raise money, and you streamlined that process. How did you come up with this idea?
Well, thanks, Todd. I was a lawyer by background, but please don't hold that against me. I call myself a recovering lawyer.
I was going to say a recovering attorney, right? Yeah.
A recovering attorney. So, I was in the capital markets for over a decade. I was helping people with IPOs and M&A. And one of the pain points that I saw with my clients was that they were having a lot of trouble with the process of raising capital. And so I set about to solve that. My co-founder and I knew that that was a problem that technology could solve. We could make it faster, better, cheaper to raise capital, and that whole complex process could really be streamlined. And that, over the last 8 years has really evolved with our customers as our partners to take us into this place where we actually help them raise capital digitally.
Yeah,
Okay.
I was impressed. I love how you say this is the new capital stack. It is intriguing to see. So my firm, by the way, we raise money for Reg A and Reg D offerings. And in our wealth management business, when we bring somebody in, almost 9 times out of 10, we recommend that they have at least 10% in private placement, usually med tech. I mean, one of our companies is going public here, which will be about a 40x return, FYI. That sort of helps people reach their goals. Something like what you've done with the Green Bay Packers. This deal that they're selling 25% of the New England Patriots for. Your investors have to have a 10x or more, return. And then the third thing I love about what you guys do is nobody's got to turn on their TV and watch the stock market all day. Do you find people find value in, not having to worry about the ups and downs?
Oh, for sure, for sure. I mean, privates, alts as a category, exactly as you said, there's huge growth opportunity, and we're thrilled to be bringing that to investors. My vision is 5 years from now, we make investing part of everyday life. So you walk into your favorite sports stadium, you get a pop-up on your phone, become an investor in the team. You walk into the grocery store, you pick up your favorite bag of chips and you scan a QR code and become an investor. And that's good for businesses. Those people are 80% more engaged with the business, but it also gives investors an opportunity to invest in the brands that they consume in life and make them a bigger part of their everyday life, which is the power that the internet and social media can have today.
Yeah.
Well, they become advocates, don't they?
They do. They're 80% more engaged with the brand. They social and organic post, which is hugely valuable for a brand today. It's one of the reasons, the cheeseheads are such diehard fans of Green Bay. A lot of people don't know that there are over 100 fan-owned sports teams in the world. Real Madrid, another hugely powerful.
Oh yeah, geez.
Right, fan-owned. There's a reason for that.
That is
Barcelona. Oh
so
my gosh! Last time I was there, first off, I couldn't get a jersey that was big enough, right? Because all these guys are like so tiny. But when you go into a bar in Spain and you're wearing that Barcelona thing and it's a Real Madrid, you do not want to walk into that bar.
Hey, so Rebecca, so you mentioned that as a securities lawyer, you saw problems. You saw how there were people trying to raise money, I guess, in the traditional legacy way. What were those problems, though?
The process was so cumbersome. So we attacked it from a process perspective. where there was all this time, people were spending time chasing paper and getting signatures. And when you do an IPO, there's a very defined process that the bankers and the lawyers and everyone is following. But when you did private placements, right, generally into privates, it was like the Wild West. There's no process. You're negotiating all these different docs. So we said, hey, if we can standardize this and make it an online checkout with all this compliance stuff baked in, then you got to go do background checks over here. Let's put that all in one centralized platform and make the time between founder getting investor to yes, getting that investor closed. Let's make that really short.
Oh, God, let me tell you, I've raised a variety of private companies. OMG. You know, I love now. If I'm an interactive broker or Schwab person, do you guys also distribute through them, or is it direct through you?
It's direct. So we're helping companies with digital advertising. They launch their ads on TikTok, Facebook, wherever. They build an audience, an online profile, and then they sell direct.
And how do you charge for that? How does a company engage you? What do they pay you to get going?
They pay us a bit of a setup and a monthly. They get all the ads created, the portal set up, but largely and between 8% of the capital raised.
That's awesome.
So walk us through the process, though. That's the guy walks in the office. He's running this media company, we'll say, and he wants to raise capital. What's step one?
So the first thing we're going to do is put them through our customer scoring mechanism, right? We're going to very data driven today because everything we do is online. So we can look at about 10 component variables and say whether they have a good propensity for raising online, because we don't want to get folks engaged in this process if it's not going to work. Assuming that it's going to work, and I assume, Todd, you said media company because you know about the Newsmax offering, right? They raised 65 million on our platform.
I didn't want to go down that path, but I was thinking up also, CrossCheck media, but whatever.
Let's not kid ourselves, okay? He's begging right now. You just can't see him.
Yeah. I mean, hey, media companies are doing great. Led by Newsmax, 65 million in 6 days. Because you've got a follower count there already who understand the business and want to be a part of the media company that they're consuming content from, right? They want to own the business that they're consuming content from already. So they're going to come to us, assuming everything looks good, and we're taking them on the platform. It'll be between a 60 and 90-day setup where we're creating marketing assets, learning everything about the story, setting up the online site. And then depending on the size of the raise, it'll be a 6 to 12-month offering to raise the target amount of capital. So we're posting ads in different channels and really understanding who their target investor is, and then loading up into gathering more of that audience profile.
Does the investor have to be an accredited investor or non-accredited? What's the mix?
Any American.
Oh, really? How do you do that?
Through Reg A and Reg CF. So there's a cap on the amount non-accrediteds can invest annually.
Okay. So you being a lawyer, though, are you providing legal guidance through this process?
We are not. All the companies have lawyers themselves because, of course, there are different things that they're going to need to do, pass board resolutions, all of that. And we have over 400 partners in our network, many of whom are very, very good lawyers who specialize in this kind of work.
Okay. So what about SEC compliance then? I mean, who monitors that? Is that up to the borrower or is that on DealMaker?
Not a borrower, Todd. They're selling equity.
I got the equity, but you know what I mean. Who's responsible, the company or DealMaker?
That would be the lawyer or DealMaker's broker dealer, and then the company, of course, themselves is always liable as well.
Okay.
Well, how about a few super hits, Rebecca? Get us a little excited about some of the things. I'm excited about the Green Bay deal, okay, but that's just me. But what other ones have you done that were you're starting to say, wow, that has really turned out well?
Yeah, one we just closed was Picasso, which is, a Silicon Valley darling. We just raised over 70 million for them. We closed that offering up last week. I think that's interesting because it's a slightly different journey than someone like a Newsmax. So they do property tech and fractional ownership model for luxury homes. They already VC backed. but they really saw value in bringing in their community of users as owners into the company.
That's a
And
great
so
idea.
they saw it really as a growth multiplier for the business. So very excited to see Picasso. You know, we've had a number of issuers now like them hitting that $75 million cap in how much they can raise. And Newsmax, you know, would be another one where they were able to go public on the New York Stock Exchange. And rather than gathering institutional capital, they worked with us to capitalize from their user base. So we've seen a lot of this trend, you know, the rise of retail over this year has been tremendous, where you saw retail investors contributing over $1 billion of trading volume in the first half of the year a day. That's up 36% from last year. So a lot of people, because they saw it on the Reddit IPO, they saw it on Figma, they saw it on Gemini, all of these companies saying, we want retail in our cap stack because we see the benefits. Now we're also seeing companies like Picasso and Newsmax saying, retail is good for us. Our community is what powers our business. That's the kind of capital we want. It's a really exciting time for us.
I would also think that if I'm looking to go get a nice rental home in Hawaii and I'm a Picasso investor, do I get any benefits as a Picasso investor?
For sure, yeah. All the offerings have different sorts of perks, and we let the companies design what the perks are for their offering so that it helps drive the business forward. So that's a big piece of this.
So on the crowdfunding side, when you have individuals that invest I'd imagine they're going to DealMaker, they're seeing a list of companies that are raising capital. What about I mean, you have to know your customer. I mean, how do you go through that process? I mean, is there an
So what
application
we
the
do is
individual fills out?
different. There's actually no portal where an investor can go find deals. So we help the company by setting up a white labeled platform and building their own community. And that's what's a bit different about our approach and why you see such massive numbers is every company that works with us is developing their own custom audience. And those audiences might be different, right? We had a company, Monogram, that does robotic knee surgery. They raised over $80 million throughout the course of many years and they got listed on NASDAQ and then acquired, right? Their audience profile skews a little bit older because of the knee replacement element, right? A lot of people have seen knee replacements in themselves or someone that they know versus some of the other robotics companies that we have that are just more in the zeitgeist of a younger audience, for example.
Okay. So when you guys started out, you were brand new, and in 8 years, you're up to over $2 billion. The early stages, though, I mean, how many times did you think about calling it quits? I mean, I'd imagine getting the story out wasn't easy at that time.
You know, honestly, I've never wanted to call it quits. It's always been an amazing growth trajectory. I think for us, it's always been about working closely with our customers and pivoting to what they need. And if we could pivot in anticipation of what they need or listen closely, you can always forge a path to where you need to get to.
Hey, how about income stuff? In other words, I've done a couple of deals in the last 12 months that were promissory notes that had very high yields. They pay monthly. My investors, my wealth management clients love them. They love getting the freaking ACH every month. Tell me about that, because I got a couple of companies for you, girlfriend.
Oh, I love it. Send them over. Yeah, we love that. And we also, because we have the investor bank accounts connected, we can just administer a deposit directly into people's bank accounts through the platform.
Oh, that is slick.
That
And by
is.
the way, every month you get the check reminds you, first off, how smart I was to invest in this. Secondarily, develops desire to, well, I really like this. Can you give me another one, Rebecca? Right?
Yeah, exactly. Because I don't know if a lot of people know, but like the traditional business model for folks who administer that stuff is to keep all the money in the accounts. And oh, I lost the address, and oh, I can't get you your check. We said, forget it. We're getting people their money because we're here to drive outcomes for the investors and the businesses. And we're just going to use technology to make that faster, better, faster, cheaper.
Okay, I'm bringing you a new word, Rebecca. It's called circularity. And that's exactly what you're doing. is creating this positive feedback loop. And in the tech world now, circularity is the big name. So you're way ahead of the game, Rebecca. You're way ahead of the game. So tell us
I'm
about
glad.
something that's exciting, something new that's exciting that you guys are looking to bring out.
You know, there's a bunch of things. I think AI is probably at the forefront of my mind and most people's mind in terms of what we do. As Todd, you've been hitting on in a bunch of different ways. It's a lot of complexity to it. And so how can we use AI tooling to make this streamlined and to make it better, faster, cheaper, and easier for people? So one example is what I mentioned, running background checks, or if someone is accredited, they have to upload a lot of documentation. And we can now use AI to read those documents a lot smoother and faster and easier. So people can immediately know, hey, your documentation's good, you're cleared, or upload some new documentation where previously they had to wait 48 hours for someone to follow up with them. And then if you think about it, when you have to wait 48 hours to hear back on a purchase, if you got to upload something else, there's going to be a lot of drop off. But if you know instantaneously where you sit, what to upload, you're going to finish making the purchase. So all of that just leads to a more efficient process.
So what size deals do you guys average at DealMaker?
So we would do anything from, $1 million all the way up to the cap of 75 million. I've been at Congress a couple of times this year, and I'll be going back this fall to advocate for those caps to increase. Because,
oh, wow, absolutely.
Yeah, we want more of those Newsmax pre-IPO type deals for investors. We want folks to be able to get in on great privates. And the bigger the company, the more capital they're raising, right? So they need us to be able to provide the retail army in higher quantums.
And what's the reinvestment rate? In other words, if someone's done one deal with you, how on average, how many more deals do they do with you? Going back to my circularity concept here for you.
Yeah, we look at that on a same company basis because each audience is repeat. And I would say it's actually tremendously high, even people doubling down into the same story, because they might get different perks with the company, or they might have wanted to test it out and see what they did. And then they hit some milestones. And so they double down on a future raise. So we've had it be, as high as 35% of a future offering being repeat investors.
So is that what the crowdfunding group, those types of investors, are they looking for perks? I mean, is that what you would recommend as a mandatory option that should be added?
We think so, yeah, especially when it's a private. The perks are the way that we help retail help to drive the business forward. So it should be something that gets people excited about the offering, but also can help drive the business.
Well, if I'm a Picasso investor, I want a deal. If I'm if you look at a consumer sort of oriented company that you do, when you're doing these Reg A, in other words, Reg D private and Reg A, public, 75 million is the max you do. But then when an IPO happens, in other words, an underwritten deal, do you guys participate in that as well?
We can in the future. We do post-IPO companies. We typically are using Reg A, which maxes out at 75 mil, but going forward, we'll experiment with other things that will give us bigger ability to go beyond that.
All right, any more exciting ones you've done? I want to hear the exciting ones you've done.
Hold on, Toby. Have you participated in an IPO?
Not an IPO, but public companies.
Yeah.
Public companies.
So
she already said that, Todd. Let her go. All right. Give us the exciting one. What are ones that people go like, oh my gosh, I was so happy, excited.
Newsmax.
I love the Oakland Ballers. That one's close to my heart, right? That's a community-backed baseball team. They just won the Pioneer League, the league that they're in. So, the Oakland A's, lots of teams leaving that community. And the founders there said, we can get capital from lots of places. We invested ourselves, but we want this to be a community-owned team. So now the community has the right to put someone on the board and help to participate in making decisions around that team. So we're really proud to see them come out and win their league and continue, on their trajectory of climbing the ranks and creating value for the community in Oakland.
Well, I think about, for instance, areas where you've had hurricanes or you've had, weather-related issues and a business that everybody loved got closed down. and you could come in and help them, not only get the business back up on the ground, but be an owner in the business and benefit from it. I mean, you can't build those brands that have been built for 75 years and then get blown up by a hurricane or earthquake or fires, for crying out loud, from my dear Altadena. I have one for you for Altadena that I think would be perfect. Altadena Country Club. Yeah, I mean, I didn't even think about that, but that's, they're stakeholders, right? They're not just investors, they're stakeholders. There's a big difference, right?
Yes, very much so. So I think a lot of what we're doing in sports is exciting. That's a place where it's all about the fans, and it should be all about the fans. And there's no reason that the fans shouldn't get to be owners the way they are in over 100 teams globally. And so we're very excited to be bringing that model to America, and have had a great reception from a lot of different teams and leagues that are launching with us over the course of the next year.
So Savannah Bananas, by any chance?
Not Savannah. I'd love to.
Well, I can make an introduction there too, because
Toby, you're amazing. You're definitely.
This is what I do, Todd. Okay,
I know. You're great.
I'm not just a talk show host. All right.
Rebecca, just curious. So the Oakland baseball team, what kind of perks did they offer to investors?
They have a bunch of different ones. The control was the main perk, allowing folks to vote on the fan representative and then have that person sit on the board and help to govern things. And they get lots of different events, and they get a lot of cool celebrities out. They have some celebrity investors as well who are backing that team. So a huge integration between the community of investors in supporting the team and getting special access and activities.
And what minor league category are they?
Pioneer League.
A Pioneer League, okay.
So the perk though, do they get extra shares? Is there like I buy 10 shares, do I get 10 more? Or, I'm just curious.
Yeah, sometimes a lot of companies will do that. The more you buy, the more extra shares that you get. So that's a common perk that we would see.
And do you have warrants by any chance on some of your deals?
Not typically. It's we do see some dividend and distribution deals, but warrants are a little more complex. Folks haven't generally responded as well to them.
Nobody's knocking your door down for a warrant deal is what I hear you saying. Okay, awesome. Yeah. Income wise though, Rebecca, give us an idea of what an income type deal, the type of yields you would be able to deliver to an investor.
Yeah, it depends on the company. So as a technology platform, we let the companies set the terms of their deals and what they want to offer. So generally companies are offering common shares, but we definitely see people sometimes, especially when the stock is traded, they'll offer a pref share plus a different perk. And so you'll see some people buying in the market when the campaign is live, but then a lot of people do want to have that differentiated pref share perk type of offering. Income deals have been done less often, but they are done, and they're quite successful.
So have you had any companies go to you that may have been looking at traditional Wall Street firms and turned them down and went with you?
I would say we operate as part of the capital stack. So typically we're seeing it in complement, either as part of a round where they're bringing on some institutional capital and then they're bringing in retail, or they're doing a retail round between institutional rounds. So less about displacing traditional sources of capital, but finding a place in the capital stack that works for the business.
And so you're collaborating with
Rebecca, what is the reinvestment rate? In other words, if I bought a deal 5 years ago, what's your average person, how many other deals have they done with you?
There's a fair amount, but because we're digitally advertising all over the internet, we're going out to millions and millions of Americans. So it's not really like a portal model where we're hitting people up with the same deals. We're building a custom audience for each deal type, which could be very different, for a seaweed brand that we did out of San Francisco compared to a robotics company. There might be some geographical targeting that we're doing for very localized offerings versus big idea companies that we're going to advertise all over America.
Okay, I like it.
Rebecca, can I be a member? Is there a membership? Is there a membership for DealMaker?
You go to dealmaker.com.
Dealmaker.tech. And
Yeah.
no membership, and there's no way to peruse the offerings. But if you hit our website, we'll probably end up geo-targeting you with some deals at some point.
There
No
you
more
go.
Picasa ads. I must get 12 of them on CNBC a day. I don't know what's going on.
That's
Yeah,
great.
people invested off those CNBC ads, though. We're
Oh,
gonna
yeah.
be,
Oh, I'm sure they did. All we know in advertising is if they keep running the ad, it's working, right?
yeah.
That's true. No doubt about it. Rebecca, we thank you so much for joining us today. I mean, this was very educational. Hope to have you back, and we can we talk about some more of these deals, and maybe we'll talk about Toby's.
Well, maybe,
deal.
maybe she could come back and do a, hey, Toby and Todd, I want to tell you about this one, and because we'd love to share with our audience.
Yeah.
Yeah, I love that.
That's a valid point. Valid point. So, Rebecca, thanks again for joining us. So, on behalf of Rebecca Kacaba and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us for Buy, Hold, Sell. We'll catch you next time. Take care.
Buy, Hold, Sell, brought to you by CrossCheck Management.